Bank of America has seen a nice rebound from its December lows. Shares are still down more than 20% from the highs. However, stock getting a little bit of a bump today. UBS has upgraded it to a buy, $32 price target. It's our call of the day. Pete, you own it, and it comes in just ahead of earnings season.
Yep. And they talk about an attractive entry point, and we all know that the banks have underperformed, and they had a really rough 2018. It makes a little bit of sense now that we're seeing more and more of this in the financial world in terms of a lot of analysts are now starting to take a look. I know we had a downgrade just the other day of, I believe, J.P. Morgan, but we're seeing some upgrades across the. I think they've gotten so cheap, Scott, that people are just saying, you know what, these analysts are looking at it. The story hasn't changed dramatically, but I think the only part of the story that's changed is where are they trading right now versus the book value? And because of that, I think it is attractive valuation.
Well, and just to take a bit of a step back, I agree with that. I think one other thing that has changed a little bit, and Steve talked about it earlier, was the change in tone from the Fed and from Powell specifically. So one of the big headwinds for banks more generally has been the yield curve. We've seen it flattening over the past couple of years. It's re-steepened a little bit in terms of the difference between the 10-year and the 2-year yield, but that's a big headwind. We don't see it. That's a big question. Let's just put it that way in terms of how cautious will the Fed be in 2019 and how much on the sidelines will they be to allow that yield curve to re-steepen and make banks more profitable.
You got Morgan Stanley also upgraded over at Citi today.
Here's why I don't own them. And I had owned Morgan at one point, owned B of A, a lot of it for a long time, and Citi for a long time.
You're tired of hearing the book value argument also?
Yeah, well, look, with these companies, you have management.
I mean, it's the only thing you got.
Well, let me finish.
Right?
This is going to be a teaching moment.
I know, but you get my point? You get my point,
Yes,
right? We talk about the banks. Oh, they're attractive. Everything's trading below book value.
Yeah, and that story's been going on for quite some time. All right, particularly with Citi.
Don't teach me. Teach the people who think
Good point. That's what I'm about to do.
All right.
So in any event, here's the issue. The managements of all these companies, whether it's Morgan, whether it's Citi, whether it's B of A, phenomenal. Battle-tested, went through the worst times that would have bankrupted any other companies. The businesses themselves are solid. You can go to bed at night watching. However, the way I look at it is that when the curve was steepening, when the 10-year was at 3.25, I still wasn't making money. I made it for a day.
See?
So they're bond proxies. So when you take a look at Bunds at 22 bips, right, German 10 years, man, you're going to keep pressure on rates here for a long time, so I just don't think I'll make money.
Well, wouldn't you think, though, that if you're looking in that sector,
right?
How about those that are actually involved somehow in the trading world, right? Talking about volatility. And that was one of the parts of the note that was also in there about Morgan Stanley was, hey, in these volatile times, you were talking about you expect to see volatility there for a while. So do I.
That's right.
I think we're going to, at least through this whole trade war, if we're still calling it a war anymore. So multiple months, I think that should add to the banks.
And these things have gotten smoked, too.
By virtue. That's a direct play in the vol.
It's a direct play. You can do it through that. You can do it through the CME. You can do it through a lot of different entities. But I think that you will see some of that hit the bottom line of some of the banks that actually do have involvement in that world.
Okay.